What is going on YouTube? It's Sanky and we are back with another one. Now in this drop I'm coming at you with a couple of plays on put on your radar, both on the stocks and the crypto side of things. But before we get this show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. Alright guys, so we have kicked off the week with the market absolutely smoking these plays, and that is across the board. Now I know it's difficult for you guys, especially my new investors, to stay composed in a day like today, and I fully understand that. Because when you guys are buying these plays, they keep on dipping. These companies are coming out with good news, good earnings, and their share prices are tanking off the back of that. And it seems like there's no end in sight. But I'll let you guys know, if you guys don't stay composed, what's happening is you are playing directly into the hands of these hedge funds and institutions. They are getting you exactly where they want you to be. Because what they're trying to do is they're trying to get you guys on an emotional level. And right now the stock market is just a big game of chess. It's those hedge funds, institutions versus us, the retail investors. Every single day they have us in check. Now, there's nothing we can do right now to move from this position, but we can make unlimited moves to stay in the game. Whether that is catching the dips on these plays or even holding, that's a move, or buying other asset classes. But the only way we lose the game is by panic selling. Now guys, broadly, the narrative remains the same out there in the stock market. Inflation worries causing noise, panic selling. That's why you're seeing that big sell-off in the tech sector, sell-off in the growth plays as well. You guys just got to realize how fragile the market is right now. It's only the other month where the market was fixated on bond yields. You can see how they've forgotten about that now. Now it's all about inflation. So all of this noise will pass. It's just a matter of time. And to help you guys get through the next couple of weeks, what you guys shouldn't do is be fixated on that short-term movement in the stock price, because you'll end up driving yourself nuts. What you actually got to do is remind yourself of why you picked up that quality play in the market in the very first place. Now, I know you guys have heard it before, but this is the time where your futures are built in the stock market. Got to remember, aim in the game is to what? Buy low, sell high. Not buy these plays 3/4 of the way when they have already run up. That being said, in this drop, I've got a couple of plays and I put on your radar that will double up. As always, guys, I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. You guys know what time it is. Let's get ready for the first one. So the first one I've got for you, that's Hyre, ticker symbol HYRE. Now I told you guys when this one dips down closer to that buy zone, I'm going to give you guys the heads up on this play. Because in the other day we saw this one trading near $14, and this one's got that spring back potential in it, as I like to call it. Now what you guys need to know about this play is they have a very low float, around 15 million shares. Now because of this, it increases the volatility of the play. So in a day like today, where the entire growth market is eclipsed by this panic selling and noise, this play is going to be affected even more. But that just opens up good entry to ride this play back up. I'm impressed by this play at the way they handle the pandemic settings, posting up revenue growth numbers of like 80% year on year, and going into a reopened economy, they should shine even more. And this isn't one of your typical overvalued growth plays that you'll find scattered in the market everywhere. This play is undervalued, even though they're in rapid growth mode. So this makes this play a good double up candidate. Now I'm going to give you guys the heads up on. Now what you guys got to realize is, for a play to double up, there's got to be a risk reward. Now these plays that have the potential to double up carry more risk. So on a scale of 1 to 10, this play is probably sitting around 7 or 8 in terms of risk, because anything can happen to the business. But if management stay on track, delivering what they need to do, this play will double up, hit that $20 mark. But along the journey, it's going to be a volatile ride because of that lower float. So check me out, I'm holding 130 shares in the clip on this one, value coming in at just under £1,000. Now if we flip over to Wells Fargo, which is a more safer, stable play, you can see I'm holding over 3 times that amount. So I just want to let you guys know how I've managed that risk reward in the portfolio across these value plays and these growth plays. So you guys can use this as a framework to help manage and structure your portfolios moving forward. Now in terms of entry on this one, you guys know we're in volatile times right now in these markets. Aim of the game is to get these plays as cheap as you can. So if you can get this one below $10, shoot for that over the next couple of trading sessions. Let's move to the next one. So the next one I've got for you, that's Hyre, ticker symbol HITIF, coming in at 50 cents. Now since I last spoke to you guys about this play last week, this one's been trading flat, which is the forever story for this play. And over the last 3 months, the very same thing. But that's just a sign of stability in that price. And I know all this one requires from us investors is a bit of patience before they make their climb. This is one where management are out there aggressively growing the company, opening up those retail outlets, making those acquisitions they need to do to take this one to the next level. Now, I've done my research on this play. You guys got to ensure you got your skin in the game and doing your diligence on these plays as well. It'll make holding these plays much easier through testing times like we're in. Now, what you guys got to realize is the market isn't letting any of these plays break through. It doesn't matter how quality they are or how undervalued they are or what catalyst they've got or how good earnings is. The market's got a hold on these plays, and until the market loses this attachment, this fascination to potential rising inflation, these plays are not going to make their breakout. But once the dust clears and the market starts regaining stability and momentum, these plays will break through. And this is going to be one of these plays, in my opinion. As you guys can see, I'm holding a very similar amount, about £1,000 worth in this one. So you guys can see a trend across these plays. And you guys got to realize for my portfolio size, this is less than 2%. So just bear that in mind when you guys are structuring and managing your portfolios. But this is just another play I want to bring to attention with double up potential and more, given their growth, given their valuation, and just given the nature of the business. Let's move to the next one. So we're switching over to some crypto now, kicking things off with this one, that's Ethereum. Now you guys got to look through that wider lens over the next couple of years to see the double up potential in this one. But just know those growing use cases and applications can take this one far. Now this one broke through that 4,000 barrier today, so that's a big move for the play. Last time we spoke about them, they're trading in the 3,000s. You guys know strategy remains the same. If you guys have your dollar cost average schedule set up, whether that's weekly or bi-weekly into this one, because this is a volatile play and the way to smooth out that volatility is that dollar cost average into the play. As you guys saw today, this one tanked in the evening, like the rest of the crypto plays, dropped down almost to the mid 3,000s. So that's why I say these crypto plays are going to be volatile. So you guys don't want to go all in on your first transaction or trade into this one. Spread it out over time because you will get better entry. It's a given. So I just wanted to highlight this one, put the spotlight on this play, because if this one continues to see the retail interest, the broad media coverage over the next couple of days and weeks, this one will continue to climb. Let's move to the next one. The next one I've got for that Shiba Coin. Now this one's definitely to have a bit of fun in the markets, blow off some steam because of that risk and volatility here. But with high volatility brings opportunity. So I'm gonna bring this one to your attention. Now, they're trying to mimic Doge-like returns and they're doing well so far. Now the way you guys play this, you can either grab a position, hold long, or you can wait for a significant dip in that price, buy low and ride them up. Either way, guys, there's a potential to make a bit of returns on this one. But do remember, this is one of those risky, volatile plays. And whatever you put into this one, do be prepared to lose it all. That's why we just throw either a couple of $100 or less than $100 at this type of play. If you've been rocking with the channel, you know what time it is. This question comes from Ethan Jill, says, can you set sell limits on Binance? Now, a lot of the principles, teachings, methods that I've given you guys over on the stock side is transferable over to the crypto side. So I just want you guys to know that and to remember those things and apply it. And one of those is setting your stop limits. Now remember, we set our stop limits to limit our downside but give us maximum exposure to the upside. And the same way we go about setting it on the stock side is the same way you set it on the crypto side. But there's a couple of little details that I want to give you guys. So it's pulled up the screen on Binance. All you guys got to do is you hit sell, select the drop down, you've got limit, market, and you've got stop limit. You want stop limit. And remember, the stop price is the price where the selling process begins. The price, that's your limit price, is where it's the lowest price you're going to get if your stop limit is triggered. But what you guys got to know is crypto plays are a lot more volatile than your stock plays, especially when they come down. So you guys want to give yourself a good buffer between your stop price and your limit price. So I just want to give you guys the heads up and make sure when you're in these crypto plays that you are using these tools to your advantage, especially if you're in it for the short term. So if there's any downwards volatility, it can cash you out of the play, you can net good returns, and you don't have to bag hold in the play. Alright guys, that wraps it up for this one. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Now, as you progress through the week, you guys know I'm turning up the heat to ensure you guys are prepped and ready to continue hitting success with me in these markets. So I'll catch you on the next one.